Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 unanimous strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 different companies that span a variety of industries, but they do have one thing in common. When it comes to Wall Street analyst ratings, they've received all buys. On top of that, the average price targets indicate some double-digit upside potential. So we're going to take a look at these 3 companies, what it is that they do, and what exactly those Wall Street analysts are predicting for the stock's future. I found today's companies over on the TipRanks Stock Screener. Found right at the top of the screener menu, here I looked for a medium to mega market cap, double-digit upside potential, and a strong buy consensus from all and the best analysts that gave us a list of companies down below. You can try the stock screener for yourself right on the TipRanks website or on the mobile app, which you can download using links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these 3 strong buy stocks. First up, we're taking a look at CORZ. They trade under the ticker CORZ, currently priced at $11.77. They are up 22% overall this past year. They did cool off from highs back in the winter, but in the last 3 months, they've regained 31%. CORZ is a leading provider of high-performance computing and blockchain infrastructure. They operate large-scale data centers for cryptocurrency mining, particularly Bitcoin, and offers AI and machine learning hosting services. They focus on sustainable energy solutions to power their facilities, serving clients with secure, scalable digital infrastructure for blockchain and computational needs. Their last earnings report did come out on May 7th, where they did have an earnings beat but revenue miss. The overall sentiment is that this is a company in transition. Total revenue for the quarter was $79.5 million and was down 16%, primarily driven by mining disconnections and relocations. They did report sustained demand for their high-density infrastructure, particularly driven by AR workloads. It is said that CORZ is still valued as a Bitcoin miner and not as a cutting-edge data center platform, which could be affecting market perception. Their CEO commented that this quarter marked an inflection point for CORZ and that in a matter of months they transformed vision into execution, delivering infrastructure at scale and positioning themselves at the center of one of the most important shifts in modern computing. Looking at Wall Street analysts, just a couple of weeks ago, we did have one from Needham increase their price target, saying that they continue to believe there is strong demand backdrop, which could vastly outstrip supply over the next 5 years and be positive for their Bitcoin mining and HPC universe. CORZ has 12 current analyst ratings and of course comes in as a unanimous strong buy. The average price target comes in just shy of $18 per share, implying an upside potential of about 50% from current prices. Looking at those ratings down below, all of them basically in the double-digit upside, ranging from 17% upside all the way to 93%. Our second stock today is one that we've certainly talked about before, that is DraftKings. They trade under the ticker DKNG, currently priced above $42 per share. Overall, in the past year, they have gained 9%, and in the last 3 months are up over 6%. DraftKings is a digital sports entertainment and gaming company that operates here in the United States. They provide online sports betting, daily fantasy sports, and iGaming like online casino services. They operate a mobile sports book in multiple states, offering betting on major sports, micro betting, and responsible gaming tools, while also partnering with sports leagues like the NFL and NBA. Looking at some of DraftKings' KPIs, they have seen a notable increase in monthly unique players, peaking at 4.8 million in late 2024, reflecting strong user engagement and market expansion. Despite a slight dip at the start of 2025, the trend remains upwards. They also shared their latest quarterly results on May 7th. While revenue fell just 20 million short of expectations, it did see significant year-over-year growth. Earnings were in line, but the company did slightly downgrade their future outlook. They revised their 2025 revenue guidance down to $6.2 to $6.4 billion and adjusted their EBITDA guidance as well. They did face challenges in certain markets with increased tax rate in Maryland and a shutdown in Texas and New Mexico. But they did see their sportsbook handle increase 15% year over year, and that revenue grew 20% year over year. Just yesterday, an analyst from JP Morgan initiated coverage on the DraftKings stock with a buy. They noted that while land-based U.S. gaming faces macro uncertainty, digital gaming is insulated from the macro environment, and they instead have to navigate regulatory uncertainty and some gaming task risk. But with this, they recommend proceeding tactically in gaming and that the gaming sector is rife with risks, but potential rewards are high. DraftKings has a total of 26 current analyst ratings, all rating the stock a buy. And the average price target of $54.25 implies an upside potential of nearly 27%. Looking at some of those recent ratings, they range from an upside of just over 5% all the way up to 40%. If you've made it all the way to our third stock today, then this is a reminder to make sure you've hit that thumbs up button. Third on our list is another company we have talked about before, that is Guardent Health. They trade under the ticker GH, currently priced above $50 per share. This stock has gained over 64% in the past year and is up 4.5% in the last 3 months. Guardent Health is a precision oncology company, developing blood-based and tissue-based tests to detect cancer early, monitor treatment response, and guide personalized therapies. Their tests, like Guardent 360 and Shield, use circulating tumor DNA and biomarkers to improve clinical outcomes for cancer patients. In their last earnings report at the end of April, they came out with both an earnings and revenue beat, plus what we really like to see, an increase to their future outlook. Revenue came in at $203.5 million, which grew 20% year over year. And since 2023, we've seen some continued upward trajectory when it comes to their revenue. While they did see a high free cash flow burn at $67 million, they also saw their oncology revenue grow 20% year over year, and both their Reveal and Shield test became gross margin positive, driven by cost reductions and improved ASPs. At the start of this month, they were granted breakthrough device designation by the FDA for their multi-cancer detection test called Shield. And at the same time, we also saw Cathie Wood's ARK Invest scooping up shares, purchasing over 400,000 shares within a couple of days. Taking a look at Wall Street commentary, last month we did hear from an analyst at Scotiabank. They bumped up their price target following that last earnings report, saying they believe the company is well positioned to deliver outsized growth driven by its competitive strength, ASP growth, and real-world evidence platform. Guardent Health is currently rated a unanimous strong buy based on 18 analyst ratings. And the average price target of over $61 implies an upside potential of 21%. Looking at those recent price targets down below, they do all have double-digit upside, ranging from 16% upside all the way to 38%. So that is a quick look at 3 stocks, all coming in with unanimous strong buy ratings from Wall Street. Let me know your thoughts on these companies and which one catches your eye the most. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any stock, so make sure you always do your own research and due diligence. Thank you guys so much for watching. I hope you have a terrific day, and I'll see you back here next time.